Imagine this. The world around you is collapsing. Banks are failing, businesses are shutting down, stock markets are crashing, and everyday people are losing everything they worked for. Headlines scream doom and gloom. People panic, and fear spreads faster than wildfire. Everyone is desperate, scrambling to protect what little they have left. People are selling everything at fire sale prices, thinking tomorrow will be worse than today.
And in the middle of all this chaos, one man is quietly buying Manhattan. Not some small property, not some cheap apartment, actual Manhattan real estate. While everyone else is losing, he is positioning himself to gain. This is not luck. This is not some random coincidence. This is strategy, patience, and understanding how money really works when most people lose their minds. This man saw opportunity where everyone else saw disaster. He understood that wealth is not created in times of stability or calm. Wealth is created when everything else is falling apart. That's when fortunes are made, and that's when the smart see the paths others miss. During the financial collapse, Manhattan looked like a ghost city in parts. Luxury buildings sat empty, office spaces were abandoned, and prime locations that once sold for tens or hundreds of millions were suddenly going for a fraction of their value. Everyone around him was panicking. Investors sold in fear. Banks tightened lending. Developers were desperate. Headlines screamed, "Manhattan is finished. New York is dead. Real estate has no future." Everyone believed it. Everyone except him. Instead of following the crowd, he studied history. And history has a pattern. Every major city, every empire, every financial system goes through crises. But great cities don't disappear. They reset, they recover, and they grow stronger. Manhattan had survived wars, depressions, recessions, and disasters. It had always bounced back. The question was not what was happening today. The question was what would matter in 10 or 20 years, and history gave him the answer.
Manhattan would still be Manhattan. Its streets would still be desirable, its buildings iconic, its locations irreplaceable. While everyone else was selling, he prepared. He raised cash when no one wanted it. He avoided the hype, and he waited. Not for a few days, not for a few weeks, but patiently for years if necessary. He didn't rush. He didn't gamble. He waited for the moment when panic would turn into opportunity. That moment came. Banks were desperate for liquidity. Property owners who had over-leveraged were forced to sell. Developers couldn't refinance their debts. Suddenly, prices dropped to levels that seemed impossible just months before. And that's when he acted. He didn't buy everything. He didn't chase every deal. He bought selectively. Prime locations, iconic buildings, properties that had intrinsic long-term value, and he bought them at prices that made others question whether it could even be real. Hundreds of millions of dollars in property purchased for a fraction of their original value, and because he had waited for the right moment, he had leverage that no one else had. The market was selling in fear, and he was buying with confidence. The truth is, most people had access to the same information he did. They read the same headlines, watched the same news, and lived through the same financial chaos. But their mindset was completely different. Most people think like consumers. They react to fear, panic, and emotion. He thought like an owner. He saw opportunity in disaster. He used fear as a signal rather than a warning. He understood the difference between price and value. Price is what you pay. Value is what you get. And when panic rules the market, price drops while value remains the same. That's how fortunes are made.
Years passed. Slowly, the economy stabilized. Confidence returned. Developers rebuilt. Businesses reopened. And New York started buzzing again. People forgot the fear they had felt, and property prices soared. Those same buildings that were sold in panic were now worth multiples of what he had paid. Rents skyrocketed, demand surged, and investors who had laughed at his bold purchases suddenly realized they had missed out. He didn't just make money, he built generational wealth. Wealth that would endure no matter what happened in the next cycle.
The lessons here are simple, but often ignored. Most people wait for certainty, but certainty rarely comes. Most people avoid discomfort, but wealth is often hidden behind uncomfortable decisions. Most people follow the crowd, but fortune favors the few who think differently. When markets collapse, the instinct of the masses is to run, to sell, to panic. The instinct of the truly wealthy is to pause, analyze, and move where others hesitate.
This story is not just about Manhattan or real estate. It's about how money really works. Opportunities rarely look attractive when they matter the most. They look risky, lonely, and unpopular. By the time everyone agrees that something is safe or profitable, the real gains are already gone. Real wealth is created in moments when others are giving up, moments when fear dominates, and when courage is required to act. So the next time you see panic in the market, the next time the world feels like it's collapsing, remember this story. Someone is buying what others are throwing away. Someone is quietly preparing while the masses are distracted by fear and headlines. And years later, that same person will be the one who benefits while everyone else looks back, wishing they had acted differently.
This is the mindset of the wealthy. It's not about being lucky. It's not about timing perfectly. It's about patience, discipline, courage, and understanding the cycles of history. It's about asking better questions, not what is going up today, but what will still matter tomorrow. Not how can I avoid losing, but where can I gain while others are scared. If you take anything away from this story, let it be this. History does not reward panic. It rewards preparation. It rewards those who see past the chaos and focus on long-term value. The man who bought Manhattan during the collapse didn't just make money, he proved a principle that works over and over, in every market, in every crisis, in every era. The world will always have fear. Markets will always crash. Headlines will always scream disaster. But opportunity will always exist for the one who can remain calm, patient, and disciplined. And that's what separates ordinary investors from generational wealth creators. While others panic, he acts. While others sell, he buys. While others focus on short-term losses, he focuses on long-term gains. The lesson isn't just for real estate, it's for business, for investing, and for life itself. Those who wait for the right moment, prepare quietly, and act decisively are the ones who thrive. Everyone else loses. If you enjoyed this story and want more real-world lessons hidden inside history, make sure to like this video, subscribe to the channel, and turn on notifications. We'll explore more stories like this, stories of people who saw opportunity when others saw only fear, who made fortune while everyone else lost, and who teach us how to think differently about money, risk, and the future. The next time you feel fear creeping in, the next time the world seems hopeless, remember the man who bought Manhattan. Remember that fortune is made by those who see past panic, think long-term, and act when others hesitate. History will always repeat itself.
Opportunities will always arise in chaos, and those who are ready will always profit while everyone else waits too long.